Hey guys, so this is my first video and I'm really excited to launch this YouTube channel. You're going to have to forgive me as I sort of ease into this being a YouTube personality. It's not really congruent with my past. I'm, this uh, pseudo-intellectual former film student, so I'm trying to find my way in technical analysis and offering you guys as much value as I can on YouTube. So let's just dive right into it, and I'm going to try to, get really sort of narrow and concise and get my point across as quickly as possible for YouTube here. We're going to talk about gold and silver today, sort of what I'm looking at. You can see we've got my trading software up here of the gold chart. I did want to start with gold. I think it's the more interesting setup compared to silver. So gold, what are we sort of looking at right now? Let's go more macro, and then we're gonna narrow it a little bit more. So the gold chart obviously is in a long-term uptrend. There's no dispute to that. We're above the 50 week, above the 200 week, unlike Bitcoin. We actually have this pretty nice bottoming tail candle here that did signal a short-term reversal in the market. You can see the last time we kind of did that, we had a little bit of a rally and then we rolled over. And I sort of think that is what gold is doing um, for the medium term. I think we're in the short term. How should I say? We're in a short term rally that is going to be sold into. We can see right now, if we do a fib retracement, excuse me, we actually rallied up into the 50 on the fib. I don't really do a lot of fib retracements. I don't have anything against them. I just like to simplify my strategy. You guys know me. I'm basically trend lines, and I use a little bit of the RSI, and I look for patterns, chart patterns, pattern recognition. To me is such a way to keep things simple, and that's what I prefer. So let's go into the gold. So we can see the weekly chart right now. We had this topping candle. We rallied up. We didn't close above this candle, and then we rolled over, right? And now it seems like we're sort of doing the same thing with gold, and that seems to make sense because gold is moving like a risk asset right now, and it's tracking with the market. I'm going to move the mic a little closer in case the audio is not great. So yeah, that's kind of where I'm looking at gold right now. If we punch in now to, I don't know about the daily, if that really matters. It's kind of in line with, yeah, with the weekly. We've got a nice little bottoming tail candle. We had a rally. I think if you were a bull and you bought kind of at this base of this candle, you did pretty well. You got a nice little move up to resistance. I actually got into some puts here. I got out on this move down after Trump made his speech last week. We had a nice pullback in gold. I covered. We bounced. And interestingly, me and my money team, we actually inched into some gold puts today, expecting another leg down in the chart. So why do I think there will be another leg down? Let's get into it. Well, I think that basically going off the 20-minute, I like the 20-minute even for swing trading because it gives me a sense of an entry. Even capturing a short swing like a 1 or 2 day move, the 20-minute chart will be useful for that because it can give you a sense of where price is going over the next couple days. I wouldn't use it for any longer than that. But you can see we were actually doing a live stream this morning with my money team, and you can see I noticed just looking at the chart um, on gold that it was sort of in this bear flag pattern, and I had ditched my puts. We actually bought back in today because I was I think we caught it right around here. It was 12 o'clock. That's right today. And I basically was like, oh, this is pretty clear using pattern recognition. We rolled over here. We're getting rolled over here. So I would assume another rollover, and that's exactly what happened. So when we broke this trend line, I actually got in with some puts around 46.60. So I'm just break even right now. This is nothing really to write home about. We were in the money around closing time. And then I figured, okay, knowing gold, it's going to come back up probably to resistance. It might even go all the way up here to 46.80. I would probably add to my put position tomorrow if we did go up there. I am getting a little more bearish again on the market, so I don't know how high gold is going to go. I would say best case scenario for the bulls, we tag this upper trend line around 46.80 and we'll get rejected lower. How low are we going to go? I'm going to make this, again, pretty quick on gold. I do want you guys to know, though, I am short gold right now. We'll see where that gets me. We do a measured move on this bear flag. Very pretty rising wedge. Again, the prettier it looks, the more reliable it will be. right? That's my rule in trading. If you have to squint, that probably means the setup is not credible. Or if you're squinting to find a head and shoulders pattern because you're bearish, I would move on to the next trade because it's probably not a clean enough pattern. Okay, so we do a little bit of a measured move here. I like to be conservative. I go to the top of the wedge, the recent pivot high. You could even potentially go here, but I want to be conservative. I don't want to have this ridiculous price target and it doesn't get hit. So that takes us down to about 46.60. As you can see here on the gold chart, if we break down, I would expect 46.60 to get tagged within the next 3 to 5 days. We'll see if that plays out. Now, it's not just good. What I like to do with a measured move is I want to look for other areas of support resistance for confluence. So you can see here we've got these pivot lows pretty close to the measured move. We got one here at 44.80. I like this one quite a bit. We actually had a lot of buyers stepped in here. You can see we had a nice move up when that got hit. And then you also have this pivot high, again, sort of around this 46.80. And then as we get lower, we have some pivot lows here, 44.20, excuse me. So I like this area for take profit if you're a bear. Gold probably would start bouncing in this region between 44.80 and 44.20. My measured move is right in the middle there. So I like this to the downside, playing gold right now. Where would it get invalidated? If the markets were to rally this week, presumably on some sort of peace agreement reached between Iran and the U.S., we would see price action break this previous support turn resistance, get back into the wedge and break above the top of the trend line, and I'd have to call it a day on my short position, take a loss. I'd probably, with my options, I'd be down about 10%, maybe 15 max, no big deal. I've already sized accordingly, so I know what my downside is. I don't see a gap up on gold by any stretch. Worst case, if there was a gap up, we'd tomorrow get up about 4,700, and I would just close the position in loss. But the bias in the short term is to the downside. Even if we rally up, I would expect rejection, as what happened here. Boom. We had this wedge pattern. Oh no, excuse me. I'm going to do this. This was my wedge pattern on gold. Up here, you can see we held here. We held, we broke, we tested, we retested, and then we rolled over. That's what I'm expecting. Now for silver, secondly, this is the last chart I'm going to do for today. Silver is not as interesting to me because it's kind of confusing. We do have this sort of nice W pattern here on the 20-minute. Let's go to the weekly briefly to see what we're dealing with. Again, I'm a swing trader, so I look at weekly, daily, and occasionally I go in to the minute chart. This 20-minute chart I like for getting the best entry intraday. That's what I use. I don't use it for long-term moves, just to be clear. Yeah, so silver, again, it looks like it's in the process of a fib retracement, similar to gold. I haven't even done this yet. Look, silver's been a little weaker than gold in some respects because it hasn't even gone up to that 50 retracement. Hasn't even hit the 38.2, which is also interesting. It could also, that's the swing high, that's the swing low. So, yeah, I would say silver's looking pretty weak overall. I would not be going long. I know this is a nice, pretty candle. The thing is, it was nice and pretty going long here. Now a lot of that move has occurred. You know, from $66, you got to move to $7. You got a $10 move. I mean, I would have definitely taken profit on those calls by now. Because I do think silver is going to go lower. You can see, you know, it's been weak. I mean, gold rallied actually up to the high of its rejection candle, whereas silver barely retraced half the candle. And you can see that the TA here was excellent. I actually should have shorted silver. I did not, in full disclosure. I did profit greatly off the shorting gold a few weeks ago, but silver broke the bear flag. It's just doing the same thing as far as I'm concerned right now, until proven otherwise. We need a god candle basically on the metals charts. So there needs to be a god candle to invalidate these bearish patterns. And that's why I say, you know, go with the charts, ditch the emotions, guys. The emotions do nothing for you. The silver is bearish, absolutely bearish. What would invalidate it? If we were to reverse above this line and confirm and close above, we're still below the 50. Then that's going to serve as resistance. So even then, I don't even think I would go long on this if I saw that. I would just let it go. I would only be a bear on silver right now. And I'm liking it quite a bit, actually. It's going short, really around between $70 and $75. I think you're going to do okay as a bear. What's the move down on silver? Well, we clearly see we have this downtrend on the daily chart, and I would expect a move. Wow, that's even. I haven't even. See, guys, this is. I'm doing this live. I haven't even charted silver. This is a move to $48. That's a significant pullback. I'm actually tempted to maybe get into some silver puts. I'm not in that yet. I'm gonna see what happens tomorrow. But we've got this candle opening on the daily chart. It just opened. If this breaks below tomorrow, I think I might get into some puts. Um, or if there's a retest up here. But if gold's going to go lower and confirm tomorrow, then I just think silver's going to go in sympathy with it. So I might just get in with a starter position and then average down if it reverses for a retest. So that's sort of what I'm looking at right now. If you want to know my game plan on the metals, I'm bearish. I'm not bullish short term. Medium term, bearish. Long term, of course, I'm bullish. Silver should be back over $100 next year. That would be my thesis on it. But if I can capitalize on another leg down in this to $50, sign me up. Sign me up, guys. That move is it's 25%. I mean, you're printing. And if I'm wrong, you're wrong. That's about a 7% move. Again, in options, it's going to hurt a little bit, but I think this just favors downside, this chart. From what I'm seeing, we're not oversold. We've gone back up to about 50, 45, 50 on the RSI. There's energy for this price to go lower. For us to get oversold again, where would we go? Starting, we're definitely going to get a bounce at the 200-day around 58. We could get down there pretty quick. If we have a measured move to $48, the only thing would be if the move down is $48 to $50, gold's going to definitely go lower than my current measure move I have it at. So just keep that in mind. The markets are still bearish as far as I'm concerned. The metals are still playing as risk on, and you just want to be careful. I think assuming that gold and silver are defensive because they haven't acted like it for really since December of last year. I would say we have too much speculation. I don't think it's been fully flushed out yet. And when it is, I think price is going to have to come down even more. We'll get the paper hands out of the trade, and then I'm going to be a buyer again of silver. If silver gets down here, guys, I know everyone wants me to be alerting calls, but the market's just I can't. You have to trade the market you're in. So if we get down to like here, I'm going to get interested again. It just seems like that's where silver wants to go. But again, it's not going to be a straight line. We've got quite a bit of support, as you can tell, at $60. That 50-day, or excuse me, the 200-day is right around that as well. So that 58 to 60 is going to be significant, a defense zone for buyers, for bulls. And if we break that, look out below. We're going to go to $50. So that's my thesis right now on the metals. Short bias for sure. I know the invalidation levels are not very far away, so I think there's good risk reward to start going into puts on this. I'm only in shorts on gold right now. We'll see what happens tomorrow, and I might start legging into SLV puts, and I will alert that in the Discord, the Stocks with Josh Discord, for you guys and to my money team as well. So that's it for today. Thanks a lot, guys. Hope you enjoyed the video, and we'll see you next time.